Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar. The top story this evening, the GST collections have finally crossed the 1 lakh crore rupee mark. This trend has been robust over the last few months and the April numbers are the highest posted till date. Timsy Jaipuria is here with more details. Timsy, collections are healthy and compliance, it seems, is also improving at this stage.
Well, GST numbers have not come in as a surprise for the government. Government was expecting to cross 1 lakh crore rupee mark when it comes to March collections, and that's what government has done. Government has not just achieved it, but has also crossed this figure. Now, let me take you across through the breakup of this number. CGST component is about 18,000 odd crore rupees. SGST is around 25,000 odd crore rupees, and IGST, which is a big spike in the numbers, that is around 50,000 odd crore rupees. Even cess is a huge jump of 8,500 odd crore rupees, where cess used to be around 7,000 and 7,500 odd crore rupees only up till now. Now, having said that, Finance Secretary in an exclusive chat with me said that government would now focus on successful rollout of e-way bill, on checking the compliance when it comes to having more and more taxpayers file their returns, expanding the tax base, and not to forget enforcement and assessment of the returns that have been filed for the previous financial year by the taxpayers to avoid any case of tax leakages. Not just this, Finance Minister also today tweeted and said and congratulated the taxpayers, GST Council and the states for healthy returns. He also mentioned that good tax buoyancy is a reflection of good economic activity happening in the country, and yes, not to forget healthy manufacturing in the country. Let's see what happens when it comes to the next financial year and the collections, because government has increased the monthly average target from 90,000 to 1 lakh crore. Whether government is able to achieve it or not, but yes, government is quite cautious right now. Back to you.
Well, thanks a lot for that, Timsy. Clearly the highest ever mop-up, monthly mop-up as far as GST concerned. You mentioned, of course, the Finance Minister tweeting. Here is, in fact, the Revenue and Finance Secretary as well, Mr. Hasmukh Adia, speaking at the India Business Leaders Summit last month. Now, mind you that speaking last month, he expressed confidence that he believed that the revenues will touch 1 lakh crore rupees soon, and that has happened now. So here's the Revenue Secretary and more reactions to the GST mop-up.
Your target is touching at least that 1 lakh crore rupee mark, sir, as far as GST is concerned. That will help you meet your indirect tax target. Do you feel confident? Because, you know, we've been ambling between 86 odd thousand crores for the last 2-3 months. We're now edging closer, as I said, for the month of February to about 90 odd thousand crores. Do you feel confident of being able to touch that 1 lakh crore rupee mark?
We should be able to touch 1 lakh crore very soon. We should be able to. Maybe in a quarter, first quarter, soon after the first quarter, we should be touching 1 lakh crore easily.
The most important thing is it shows the stability in the system, that things are working well, and as I've said in your earlier interview as well, that it is going to touch and cross 1 lakh crore by the end of the month. So that has happened, and once we have the e-way bill also working, as I said, revenues are going to further rise by at least 15 to some people say even 20%. So that's overall increase in the collections that would take place. When you look at the compliance also, there are more people complying, and as I said earlier, once we have the ease of filing returns, which we plan to do, we are having our next meeting by video conferencing on the 4th. Once the decision on that also is taken, I think we'll have much more compliances and things simplified much more.
I think that the revenues are now stabilizing at a range of approximately 90 to 95,000 crores. So if you look at the trends of the last few months, it seems 90 to 95,000 is where the normal revenues are stabilizing. We are also expecting a few anti-evasion measures. Some like e-way bill have already kicked in, and some like reverse charge and invoice matching are expected to kick in the next 1 or 2 months. This accompanied by the fact that the government has been playing the stability card in GST. So if you look at the last 2-3 months, they have not made any across-the-board changes except making it simple and easier for taxpayers to, file. And all of this together, to my mind, should lead to a revenue which will certainly be at par with the budget. Because if you look at the budget, the government is expecting GST revenues to grow at approximately 15%. Now, if that has to be realized, in that case, the revenues have to match month on month, year on year. So with the large amount of simplification that they have already done, together with the anti-evasion measures which are to take care of those segments which do not pay the relevant tax, I think the bright story for GST has already started.
So green shoots there with respect to GST mop-up, the highest ever monthly mop-up, in fact, north of 1 lakh crore rupees. Let's move ahead now to the other top story. The government has extended the deadline to bid for Air India till the 31st of May. Keep in mind, earlier it was 16th of May. Centre has also made 160 queries it received on the divestment process, and its response is public. Centre has made it clear that it will give up control and remain a minority shareholder. Government also says that the conditions to safeguard employees will be revealed at the request for proposal stage. That's the RFP stage. Ashpreet Sethi is here with more details. Ashpreet, more queries on control and the issue of employee safeguards. That was the focal point one imagines. Ashpreet?
Well, absolutely. In fact, if you look at the stories which we've done earlier as well, the main issues that have been raised right now, of course, as far as the debt situation is concerned, that has not been clarified yet by the government as to what will be the actual debt here. The second point, of course, being what happens to employees? Is there a VRS scheme? Also, what will the government be looking at as far as retaining of employees is concerned? Another big issue, which most of the queries are being referred to, is the 24% stake that the government will hold. Now, the biggest question here is, and suggestions that have come in fact, from the interested bidders, is that why don't you give up the 100% stake that you have? Why keep even the 24% stake? But the government has said it's a decision which has been taken after the cabinet approval. If any dilution required, it will be done through ESOPs or when employees come on board. Now, another question which remains unanswered is what happens to the code share agreements? The government has given a very holistic view, saying it will remain intact. In fact, if we use their word, it says we expect it to remain intact, but there have been certain tweaks which have been made regarding consortiums only because queries were raised whether more time can be given. The extension has been granted till May 31st as far as bids are concerned. Now, this is a brewing story, of course. There are these queries and responses have been given by the government, but just to take view, we have Kapil Kaul from Kappa India here. Welcome to CNBC TV18. So let me first begin by asking, while former Secretary from the Commerce Ministry, Ajay Dua, told us it was a tepid response, I spoke to some officials who are involved in the divestment. They are saying we are very happy with it. So what is your first take?
Well, I think, first of all, good evening. Our expectation is that the response will be very good. Obviously, this is a very complex transaction. A few elements that were, there are certain stuff, some outstanding issues which need to be corrected at the RFP stage, or there may be some flexibility or changes in the terms and conditions of the bid as we go. But I would think that one thing that is clear from today's discussion and the change and the amendments and the question that has come from various bidders is that the government is flexible in all the strategic issues that the government people have raised, whether with respect to the government's divestment. And I think the government is made it clear that it will have a share of a minority investor. The IPO, there is no 3-year term. Call and put option will be reflected in the RFP. Operating synergies will be allowed. Labor, which is very critical, would come in the RFP stage. More clarity on the debt as we go along. That will be in the RFP stage. The only thing I can make out of today's document and the government's response especially, I'm not surprised with the response from the potential bidders. The government's response continues to be flexible. I am of the view that key strategic issues will be aligned, will be further, for example, changed, but perhaps not at this stage. I am of the view that the government is open to make it very flexible and make sure that this transaction actually is successful. So all I can make out of the responses of the government, because I'm not surprised with the responses from the bidders, but the responses for the government are or give me a sign of flexibility, give me a sign that the government will make further changes as and when required. And the process will invite some significant interest. And we continue to maintain that.
Okay, then, sir, just to get some clarity here as well, while the extension has been given considering the questions that have been raised regarding consortiums, do you believe that more foreign entities will be part of the consortiums now that an extension has been given?
I don't think 15 days would make such a great difference. I don't think that is it gives more time for preparation, and because most of these global companies will have to take legal approvals once they go and bid for an EOI. There is a cost to the bid. It takes a lot of management time. They'll have to get strategic clarity. So giving 15, 20 days time maybe gives them more time for preparation. I don't think it significantly changes the level of interest.
All right, so then before we let you go, let's just ask you one more question. Might not be Air India related, but the Telecom Commission has given a go-ahead to the TRI recommendations. As far as on-flight internet is concerned, they're saying they will leave it to the market. There will be no cap. So what is your view on that?
Well, I think I don't think that for the domestic there is a viable business case at the present moment, because it will cost between $400,000 to $600,000 plus maintenance cost and other costs involved. It may be difficult as of now to have a viable business case in the domestic. You may still see some airlines, like Vistara, from a strategic perspective, going for that investment. But largely at the present moment, I see that the cost would be prohibitive in the first case. There may not be a business case, but in future, I think it's going to be a reality on the international flights, even on short-haul international flights. May take time for domestic to fully incorporate it because there are new technologies with respect to Wi-Fi on board coming, which are cheaper. But initially, I would think that there may not be a business case for airlines to go ahead for this investment.
Right, so thank you so much for joining us. Well, Ashmit, back to you at the studio.
Right, Ashpreet. So clearly a number of takeaways there from that couple call exchange. Of course, as far as the issue that you pointed out was with respect to the telecom reforms, in-flight internet, I beg your pardon, has now been given the nod. In fact, that's not all. A slew of reforms, including an ombudsman for the grievous redressal, is on the anvil. What we understand is that the Telecom Commission, what it has cleared an amendment to the TRAI Act. What that effectively does is that it gives TRAI, the telecom watchdog, the power to set up an ombudsman. Now, this ombudsman can be specific with respect to specific telecom service providers. It could also be an ombudsman for certain geographies. That's a call that the telecom watchdog will have to take. It will also have to take a call, the TRAI will also have to take a call on the powers, whether or not the ombudsman will be given any teeth in terms of any penal provisions, in terms of perhaps penalties. That's another decision that will rest with the TRAI. Of course, all of this in lieu of a broader strategy by the DoT to ensure that there's a better grievance redressal mechanism. Of course, as of right now, their reference point is that they receive as many as 10 million complaints every quarter. So that's, of course, some concern being expressed on account of that decision being taken with respect to the ombudsman. And that's, of course, news coming in from the Telecom Commission. But let's shift our focus to Deal Street, M&A Street. And one of India's largest engineering and infrastructure company, L&T, is exiting some of its non-core businesses. The company will sell its electric and automation business to Germany's Schneider Electric for 14,000 crore rupees. Now, both companies expect to complete this deal in about 12 to 18 months. That's, of course, subject to regulatory clearances. Here is the L&T CEO and the rationale for this deal and why they zeroed in on Schneider as the buyer. Listen in.
Schneider, as you all know, is a 24.7 billion euro organization. And it's one of the best companies to house this business of ours. It's been an integral part of Larsen & Toubro, but as we move forward on our path of infrastructure, construction, EPC, manufacturing, defense, and certain services, we feel this business does not fit into a long-range thinking. Business also requires a fair amount of R&D spend, tooling, and such other factors to keep it positive and moving. So we believe Schneider is a good company to handle that, to take it forward.
Staying with that story, Nisha Podar is with the head of Schneider Electric India on this deal. Take a look.
It's a large transaction between Larsen and Toubro as well as Schneider, and 14,000 crore rupees of transaction. We have with us Schneider in Electric India's head, Anil Chaudhary, joining us on the phone line. Mr. Chaudhary, good to have you on CNBC TV18. Many congratulations on this large transaction. First of all, how does it fit into your strategy by buying electrical as well as automation business in India? What does it mean for Schneider in India?
Yes, Nisha, thank you. Schneider Electric, together with Temasek, has reached an agreement today with L&T to acquire their electrical and automation business. And now, this business is very, very important and strategic for us. It's core of our business. By combining this business of electrical and automation together with our low voltage and industrial product automation products business, we will be creating a very strong business here in India, which is strategic not only for India, for our stakeholders in India, but it plays a very strategic component in our global footprint. And this will be serving, for sure, the fast-growing India low voltage and industrial automation market. This transaction is also very important from Schneider Electric point of view, which brings strong global technology platform, digital offers, and global presence, together with electrical and automation's wide domestic reach, coupled with end-to-end R&D and manufacturing capabilities specific to Indian market. And especially post-transaction, India will be the fourth hub of Schneider Electric, and it will become an innovation and manufacturing center for low voltage and industrial automation products for India, as well as new economies, notably in Middle East, Africa, and Southeast Asia. India will also become the third largest country in terms of revenue for Schneider Electric, at par with France. And this deal will also be bringing in state-of-the-art and solutions and products to our customers, and especially this deal is for India.
All right, so third largest in terms of revenues coming in from electrical and automation business. That's a large chunk that you're getting by way of this transaction. But Mr. Chaudhary, you also have a tie-up with Temasek, which is equally a part of this transaction. What is the total arrangement? What part of this 14,000 crore rupees coming in from Temasek?
So you have already probably seen that Temasek is our strategic partner for this deal. They are also equally committed for new economies, and especially with respect to India as a country. And they are, have been investing here. And with this deal, they are very strongly reinforcing their commitment for India, like Schneider Electric. Now, the whole deal will be this. The deal is shared 65% as a majority share owner by Schneider Electric and 35% by Temasek. And Temasek will be bringing very strong managerial and India experience for us to achieve all our objectives, as well as to bring a lot of values to all our stakeholders, notably, very importantly, our customers and the employees coming from both organizations.
Yet another twist in the long turn of events and twists and turns in the race for Fortis Healthcare. Malaysia's IHH has sweetened its offer to acquire the company, and Munjals and Bermans have also revised their offer. Here is how the four players for Fortis Healthcare currently stack up. Manipal and TPG are offering 160 rupees per share, Radiant at 170 to 175 rupees per share. IHH is offering 175 rupees per share, and Munjals and Bermans are offering 172 rupees per share on a weighted average basis. I must underline that all of these offers are also different from each other in terms of upfront payment, absorbing liabilities, as well as other contours. So subject to all those differences, that's broadly the price that they will be offering per share. That's how they're stacking up as of right now. Well, let's move ahead now. The resolution process in a major bad loan case has been halted by the National Company Law Appellate Tribunal. The NCLAT has ordered a status quo on the insolvency process of Electro Steels. The move comes after a petition was filed by one of the losing bidders, that's Renaissance Steel. And well, the government has announced that every single village in India now has access to electricity This after a remote village called Leasing in Manipur became the last to get access to power. Now, in April of 2015, the government had identified over 19,600 villages which didn't have access to power. And 3 years later, the government has said that the mission has been accomplished. The government considers a village as electrified if about 10% of the village has access to power. So this does not mean in any way that every household in the country has electricity. In fact, according to the Power Ministry's own data, over 3 crore households still do not have access to electricity. The Minister for Power, R.K. Singh, spoke to CNBC TV18's Rituparna Bhuya, and he's confident that providing power for all households by the end of this year, 2018, should be possible, even including those 3 crore households that are yet to get connected.
We have reached every census village. Right. That's what we have done. Right. Now, for 100% electrification, we will have to connect every household. Yes. Which we plan to do, which our target is that we do this by the 31st of December 2018. Right. It's a huge target. You know, the states have reported that there are 37 million households which have not been connected with electricity as yet. Imagine, 71 years after independence, you still have 37 million households not connected with electricity. We have to connect all that. Up till now, we have done about 50 lakhs. Right. But we have a huge amount of ground to cover.
But, you know, it is within that period of time that all these houses will be electrified. Yes. So how are we going to do it? What is the strategy going to be like?
You see, how we have worked it out, and this is something, you know, which we have worked out with all the states in discussions here, and then we go to the states and discuss it with their minister, the chief minister, and the principal secretary and the CMDs of DISCOMs. So we've done this in discussions with the states, and we have refined strategies. So, you know, the teams have been formed.
Right, so 3 crore households, 8 months, that's the target that the government has set for itself. Let's shift focus now to the automotive space. Sale figures for the month of April have started to trickle in. Maruti Suzuki is leading the way with a blowout month as sales hit their highest levels ever. Total sales have risen by over 14%. Tata Motors is also reporting an 86% sales growth as both companies seem to have started the new financial year on a healthy note. Well, that's all we have time for. It's a wrap on this edition of India Business Hour. Thank you so much for watching.